We're showing you what is happening right now and what is going to happen in the next 12 months and what we think is going to happen in the next 5 years. So we're making some big predictions here. Hi, I'm Tom Denford and I'm in New York.
And I'm David Indo and I'm in London.
I spent a decade as a global executive for agencies like WPP, Omnicom and Publicis.
And I spent a decade as a senior marketeer managing media for powerful brands like Coca-Cola and Nike.
And 15 years ago, we came together to create IDComs, the world's first specialist media advisory and analytics consultancy. Today, the company spans 14 time zones and we serve dozens and dozens of iconic brands around the world.
This is our show MediaSnack, where we share our bite-sized expert view on how procurement and marketing leaders are winning in media today.
We appreciate you tuning in and we're excited to dive into today's show. Okay, welcome to another special edition of MediaSnack where we get to kind of play with logos. We're going to play like agency logo god. We did this a few years ago, you might remember, and we'll link to that if you've seen, where we were looking specifically at WPP. We'll probably have to do that again now that we've got a new CEO of WPP. But we thought we'd pan back even further and actually look at the whole of the kind of major global agency system. And particularly at this point, because as we've mentioned in a few previous episodes, we think this is what we call a red ocean. A red ocean means a category where there are sharks in the water and blood may be spilled, in the sense that maybe not all of these companies are going to survive and thrive because it's getting very, very competitive and pretty narrow. David, what have we got? Tell me what we're looking at.
So on the far left-hand side, we've got the major platforms. So this is where the 60%, 70% of the global trillion-dollar marketplace that we operate in is going. And that's only going to get bigger. This is the big holy trinity of media platforms that absorb most of the money. So we've got Meta, we've got Google, and we've got Amazon. So that's where the cash is going. And then in the middle, we've got the big holding companies. You've got 6 big holding companies, WPP, Publicis, and Omnicom. They're the 3 biggest ones. And then you've got IPG, Havas, and Dentsu, widely regarded as the more agile and sort of entrepreneurial, smaller holding companies. And then on the 4th column there, you've got some independents. You've got Stagwell Group, Horizon, and Cross Media. So these are the independent companies that often compete for business with the big holding companies. And then on the right-hand side, you've got the kind of the platforms, the channels, and the entities that the clients that are currently represented by those agencies and those holding companies want to have relationships with.
So we've put them there. There's obviously, there are more of those, but they're just to represent the content owners, really. These people that are obviously investing, or rights owners for major content opportunities that brands want to associate with, as you say. So that's the kind of the broad level of the landscape. I think it's interesting that, we now put like Meta, Google and Amazon kind of almost at the top of the pile because, as you say, they really control the majority of the money flow for the moment through those things. So let's just kind of think about what's going on. So those 3 companies are incredibly powerful and significantly multiples time bigger than any of the holding companies, both in terms of their scale, their reach, their influence, their profitability, their technology. I mean, they've gone from being a supplier to an agency to really being the marketplace. And agencies are having to dance somewhat to their tune, a little bit. And they would like more influence. And that's one of the reasons that we've seen consolidation.
The other thing to note there, Tom, is in most cases, big advertisers have direct relationships with those 3 companies. So they have contracts directly with their most important media platforms. Where if you look back at maybe 10 years ago, where the big broadcasters were the dominant media owners within the marketplace, all trading, or the majority of trading, would go through the agencies. Here, those platforms have worked really hard establishing deep, powerful relationships with clients themselves. So the question is, do they need their agencies in order to buy inventory and trade inventory?
Exactly. So that's got these agencies a bit concerned. And so a few things are going on. One, the first big surgery, and by the way, this episode is we're showing you what is happening right now and what is going to happen in the next 12 months and what we think is going to happen in the next 5 years. Okay, so we're making some big predictions here. Some of the stuff's obvious, right? So we've got Omnicom that's looking to acquire IPG. Okay, and IPG, if that's the case, will disappear from this slide because the whole combined entity is going to be called Omnicom, and there are a few reasons that's happening, but one of the main reasons is a combination of these three assets. You've got Omni platform owned by Omnicom, Flywheel also owned by Omnicom, and Axiom, which is a data asset of IPG. Okay, will likely all be in some form merged together. Okay, so get ready for some brutal surgery. IPG is going to disappear as a brand, and then it's likely that, I mean, these logos will probably hang around for a little bit, but ultimately you're going to get rid of that and you'll probably have some consistent single platform Omni. Okay. But for the purposes of this, we're just going to remove that. And Omnicom becomes the brand. And what we're going to see is that you've got WPP, Publicis, and Omnicom there. And as we've talked about, that acquisition of IPG enables Omnicom to leapfrog Publicis and WPP to be the largest of the three. So let's just do that right now. Congratulations, Philippe John. Your wish comes true. You are now the largest of the holding companies. And depending on what you look at and what metrics, they're obviously, you can rank them in different ways. But basically, there's the three of them. And they care about scale now.
Yeah.
For two reasons. One is that they get to fight, have a bit more punch when they're agreeing with Meta, Google, and Amazon. And the other thing is, as we've talked about, is that they are relying on a primary underlying business model, which is moving towards principle-based media buying, which is incredibly lucrative for these agencies currently. And that is going to be the core of their revenue and profit growth in the next 5 years. So those three agencies are wholly committed to that as a revenue stream and wholly committed to that as a business model. And we can't say that definitely for the others, but I think it's clear now that those three will represent obviously a significant proportion of the market and will want to grow their market share to a totally dominant position.
That's right, in terms of trading. Now, the question is, do they undervalue or begin to ignore strategic planning? If their ambitions and objectives are to drive margin through online biddable trading, which is a sensible solution if you're a commercial entity like these three, do you really care about the strategic bit, the important but costly bit of strategic?
Well, I mean, I think that's a lot of advertisers are starting to ask that question, and we are talking to CMOs about this because it's a long-term risk to them that may come fairly quickly.
That's right.
As those three shift to a business model which is it's more lucrative for them to buy and then sell media, to broker media or arbitrage media, it's all the same thing, pretty much. If they make more money from doing that, they shift their business model from being a service business, which is what traditionally they've been, in service as agent to the brand, to being a sales business, which is buying and then selling on media at a margin and a profit. And if they make more money doing that, they won't be long before that becomes 51% of it's probably already 51% of their profit. But once it becomes 51% of their revenue as well, which I'm sure it will do, they are going to be primarily sales businesses. The three of them want to grow to a point where they, in that sales mindset, they are the marketplace. And I'm not sure that the red ocean just applies to them. I don't think that the three of them will be really scrapping to hurt each other. I think that they will like to exist in a bubble and marketplace of three. They'd all like to be the number one of those three, so there will be some competitiveness, but I think they'll maintain a market of three. I think that's what we'll see. And Omnicom, WPP, and Publicis Group will be the dominant sellers of media globally. They become the marketplace. Yeah. And that means for an advertiser, that you may in 3 or 4 or 5 years have non-exclusive contract with Omnicom, WPP and Publicis for the supply of media. It's potential. So this idea of, competitive worries or, with the best agency, you might have some kind of contract for supply from all three. Let's see. So let's think, what does it mean? What does it mean for the others? Because if we look at, and I think we can cluster these ones together as like the next, there's definitely a next 4. I think cross-media's got maybe some more different options and paths open to it. Because, can we use cross-media as an example of an independent, privately owned agency that so far has kind of pretty much rejected principle-based buying and say they're in a segment, maybe a smaller segment on their own, and that's a different path. They're offering a different value proposition to advertisers. So we maybe put them and their peers in a different category. But so what happens to Havas, Dentsu, Stagwell, Horizon? Yeah. Which feels like this is where the red ocean might exist.
And this, to me, is where it comes down to client demand, client appetite for strategic thinking. Because as a client, you've got kind of 3 options, I suppose. You can use one of the big 3 to buy your media and plan your media if you want.
And sell you the media.
Which, is fine. And the only real challenge to that is that you won't be able to audit the price with which those big holding companies have bought the media in the first place. Or you can buy your own media internally, but then you'd still necessarily need some kind of strategic resource. Where are you going to go for that? You might go to the big 3, or you might go to some of the smaller, more independent, more strategically led businesses, as we've got there. Or you outsource it all, right? And you begin to start outsourcing both buying and strategy. And you could do that by using one of the independent companies to bring you some smart, strategic, independent advice, but then still allow one of the big 3 to buy.
So I think that's interesting, and that's where we're talking to brands now, right? So is actually brands thinking about separating planning and buying, and I think that's a realistic provocation that we're making to a lot of brands, is that those 3, Omnicom, WPP and Publicis Group, the implication is if they move to more of a sales model, why would you ask them to plan media? Because of course they have a vested interest in the supply, and they don't really care about necessarily optimization for you. There's an argument to say there that, well, they want to be paid on outcomes, and increasingly they might look at that. I think that's a topic for another future MediaSnack, is actually the payment models and incentives for these agencies. But on the basis that they're primarily a sales, I wouldn't ask them to plan my media necessarily. You don't ask a supermarket to sell you, to make a shopping list necessarily. Yeah, I think that's true. Like, who does the planning? That's going to be a really critical decision. A lot of CMOs wondering whether now to really bring that insight strategy, data insight strategy planning inside to be closer to the business, because it makes a lot of sense to do that.
Exactly right.
And then the execution, this is really a macro look at the really execution model and how that's changing. So yeah, you're right. In terms of Havas, Dentsu, Stagwell, Horizon, I think the brutal hypothesis here is that they're all up for sale. Okay. I think that, Havas has separated itself from its kind of Vivendi listing, and it's listed separately. In theory, Dentsu's assets outside of Japan could be bought. Stagwell, which is it's an independent but a holding company, clearly being built in an entrepreneurial way. They say they're not for sale, but of course everybody says they're not for sale, but would be a good potential acquisition if it was a good fit. And Horizon, privately owned, very dominant in the US, a big beast in the US that would give any of these other 3 some big scale. And still owned primarily by the founder Bill, and at some point you'd assume that he would want to realize all of that great work that he's done. So I think all 4 of those potentially up for sale. But this is where the red ocean exists, is because those 4 logos may not be around for very long. I don't know. Let's just say, right? So all of those potentially buyable, who would buy them? Well, there may be some, again, we're not the investors and we don't do the analysis on the books of these businesses. So there will be some analysts who might challenge this, but we've said some pretty bold, provocative things in the past that analysts said was ridiculous that are now happening. So would it make sense to consolidate those four? Maybe they all come together and they figure out that there's actually a viable business there, because whilst we say it's a market of 3, there could be a market of 4. In theory. So Havas, Dentsu, Stagwell, Horizon, maybe they're going to be picked off by Omnicom, WPP, and Publicis Group, who have varying levels of ability to make acquisitions, but who knows, right? That could be viable because they're in a play for scale. The risk of those 4 in the middle, though, is that they are neither this or that. That's the biggest risk, and that's the message we've been giving to the leadership of some of these agency groups. Is like, you've got to decide which side you're on. They're toying with a bit of principle-based buying, but they haven't gone as far all in and organized commercially than the other 3. But they're also trying to kind of trade themselves on their independence and their creativity or their planning chops, or, and the danger is that they're going to get squeezed by being neither. And they've got to be very bold.
Yeah. And actually, that's right. And that makes them deeply appealing. So you could see, for example, the cultural affinity with Havas and Publicis Group, 2 French businesses, Havas being dominant in Southern Europe and in Latin America, Publicis seeing kind of real value in there. Maybe that is a synergistic option. Dentsu will remain dominant in Japan, but really it's international business. You could see perhaps Omnicom or WPP having a little nibble there. And suddenly you're talking 3 with a handful of independents that are, as you say, having to decide what they are going to be. Are they going to compete on the buying front with the big 3 or 4, or will they become the aggregators of smart, strategically driven clients that need something from an external partner that they can't afford to build internally? Because there are going to be those businesses, as I think you mentioned earlier on, that actually are looking to focus their in-house development around strategic planning and thinking, and outsource kind of the executional bit, because they can just as well do that with the big 3 or 4.
So I think just to kind of tidy this up a bit, to the team at Cross Media, you have a great agency. I'm going to take you off the board, and the reason is that you kind of go on a different board now. You go on a kind of great independent agencies that they've got to kind of navigate these choppy waters. But I think they're out of this game in the sense that they're not in the principle-based buying game, and they're not necessarily in this red ocean. They can thrive and survive. They may want to sell their business, but I don't think they're going to be caught up in part of all this kind of crossfire between these agencies. These 4, I'm going to take them off the board, because I think over the next 4 or 5 years, I think these brands are going to be consumed somewhere. And there is one big logo that I know everybody's screaming is missing from this, right? Which we've intentionally left off. It's just hiding in the side, in the shadows here. If you can guess, you can play along with us, you can scream at the screen now, like, which is the logo that's missing from all of this that could change the game entirely? And here it comes. Accenture, or Accenture Song. I've got the Accenture Song logo, but we don't like it, so I'm just not going to put it on the board. So Accenture has a business called Song, which is kind of marketing services, and within that, there's a marketing and media division, which has played and tinkered with media, hasn't it? It played around with media 5 or 6 years ago, and they've built up a reasonable size of business, actually, kind of by stealth. What they haven't done is develop a full service media agency kind of offering, like full buying. And they've made some recent hires. They've just brought in Dimitri from IPG, we mentioned, and I spoke to him in Cannes, and I said to him, okay, well, this is the way we see it. I explained to him, this is the board that we see, and the red ocean, this is the time for Accenture to come in. Why not Accenture to buy Havas, Dentsu, Stagwell, Horizon, And bear in mind, Accenture's bigger than all of these agencies combined, and then times it by 10.
Yeah.
So,
That's right.
potentially have resources to kind of snap up some things. Accenture has the resources. It may have the strategic need. And if there's a company on this board, excluding Google, that is better at buying and integrating companies, I would challenge you. So Accenture is the really interesting one here.
And also, Tom, Accenture has senior stakeholder relationships with all of the big clients that all of these logos have. All of them. They've already got deep institutional knowledge and deep relationships with most of the key players that these logos want to.
Exactly right. So they're a huge threat here, and they have to decide now in the next probably 6 months or so. And that's part of Dimitri's going to be part of Dimitri's job, is kind of assess really what the opportunity is. Do they go full into media? I'd expect that they probably would, because I think there's a lot to be gained. And it's not just a scale play on the relatively small margins of that of media trading. The opportunity there is to hold and add additional value to those existing relationships. So I think we can we're playing around here, but we're going to do some pretty brutal surgery. Okay. The obvious thing would be to try to make some acquisition between Havas, Dentsu, Stagwell, Horizon. However, we've been saying in our analyst calls and to various people that might listen to us as we ramble along, and we've probably said it a couple of times on MediaSnack, is that Accenture acquiring WPP would make quite a lot of sense. Culturally, probably the best fit of the holding companies into Accenture, and currently significantly probably undervalued. If we look at the valuation of Omnicom, WPP, and Publicis Group, WPP is really undervalued. I asked my ex-stockbroker father-in-law what he thought about WPP buying WPP stock at the bottom, and I won't tell you what he said. He wasn't that enthusiastic. So maybe there's room to go further down for WPP, but it's under market. It's probably underpriced versus the other two. So there have been rumors that Accenture and WPP are in talks. We've heard the same rumors as everybody else. It's something that we've been predicting, and every analyst said, no, that would never happen. Why would anyone buy WPP? But that could be a good call. I quite like the idea that they come in and create a fourth, though. So for the purposes of this, I don't think we should lose WPP off this board. I think what we're going to do is we're going to just remove these other four for the moment, okay? And we're just going to put Accenture in here. So that's a pretty scary proposition. Omnicom, WPP now squeezed significantly between Meta, Google, Amazon on one side and Accenture on the other. The interesting thing about Accenture in this scenario is that they become a category of one, is that they have absolutely no interest in principle-based buying, brokering, arbitrage, any cloudy kind of margin work at all. They're literally looking at volume, and they would probably be able to do pass-through of media on relatively smaller margin compared to the others that have to derive their profit solely from that. And that profit is also subsidizing. In Omnicom, WPP, and Publicis Group, the profit from principal buying is subsidizing other less profitable activities, notably creative and production currently. Accenture less encumbered with that. So you could find Accenture actually come in, create a market of four with a business model that is different, fully transparent, and maybe even cheaper than the other three. That would be incredibly worrying for those.
Yeah. Which they, if you remember, they tried to do that. They came in with a buying model that was based on absolute transparency 6-7 years ago, and they just struggled, I think, to sort of get it off the ground because their cost base was so distinctively more expensive than the holding companies that clients were struggling to justify the premiumness of Accenture. But coming in and absorbing or acquiring established media operations that they could begin to sort of build into their own organization, their own operational structure, without having to do it organically, makes a lot of sense.
Yeah, exactly right. And now, media buying is data, technology, algorithm. Accenture's been pretty good at that to date. So this is their moment, and this is the big move that we're anticipating. Okay, so that's the red. Now the ocean's now calm. There are far fewer logos, but it's incredibly competitive. That's all good for the marketer. Why have we got Netflix, NFL, and YouTube on here? Because they're the content owners. So actually, if you speak to a CMO, do they really care which of these logos they work with from an agency perspective? Well, they do to an extent, but what they really care about is where their brand's going to show up in the world. And so what's going to be very interesting is then, do the agencies become somehow the gatekeepers of access to content? And these are different from the platforms that have their own direct relationship, but the content development. So we've used Netflix, NFL, and YouTube as examples. You could understand in this new ocean scenario here, Publicis, as an example, might think, okay, why don't I go to NFL and buy exclusivity for 10 years or why don't we bid for all of the NFL rights to sell advertising for NFL? Let's create exclusivity. And so I think you'll find these big agency groups now using their leverage, their new scale, there are fewer players now, to try to tie up exclusivity on content brands. I think there'll be a race for ground share for exclusivity. And that's why, and Publicis will say, if you're a beer brand, you're an automotive brand or anything really, if you want access to any NFL property, you've got to come through us now. And we are the official reseller of NFL property. Or there's some joint venture that's created that creates that. And that's why brands will want and need to have non-exclusive deals with all of these agencies in the future, because we think it's going to go to, they're just going to be the buying points or the access points to where people are spending their time, which is what this is all about. And, Netflix, NFL, YouTube are going to be three of the real kingmakers in this, and decide perhaps which of these agency groups is going to thrive in the future. And if they're not doing it already, the leadership of these agency groups should be pre-negotiating now, starting to figure out what exclusivity they might be able to offer to their advertiser clients.
I mean, just looking at that board as we've now got it, we talk a lot about the marketeer's challenge around complexity and how confusing the media landscape is to many of them. I mean, one thing that does shout out is simplicity. There is a raw simplicity about a rationalized marketplace like that, based on scale, based on commercial desire, and some would say greed. But at the heart of that, it is, how will clients enable themselves to navigate this, to make sure that their interests are looked after, and it's not simply the bottom line of the holding companies and the advertising ecosystem. That, if I was a client, would be what I would be asking myself. How can I exploit this simplified landscape to my advantage?
And it's factoring in now. These are decisions that are being made now, where we're involved in advisory work with marketers and procurement leaders, thinking about the future of the category, renegotiating contracts with their agency, where we start to look at this as being a potential realistic future where things are probably going to change more so in this arena over the next 5 years than has happened in the last 15 or more. And so, you need to be aware, because the power balance is obviously shifting. What we're finding, and we'll do more of this on MediaSnack, I think, as rightly as you point out, is that how brands build their capabilities and organize themselves internally is going to be a huge determinant of how they fare through this. But anyway, that's where we've got to. So, this is not investment advice, obviously. But, we look at these things quite carefully. And I think historically we've been fairly correct on the way things tend to map out, and we can see the trends and the kind of little twitches that start to signal movement in advance of that. So that's where we are. Good. Get ready for your red ocean. We were thinking about having a shark graphic to come and eat some logos here, but we thought maybe that was a bit too much for a Monday. Okay, look forward to seeing you next time on MediaSnack.
Thank you for joining us on this episode of MediaSnack. If you enjoyed this episode, please leave a positive review and remember to like and subscribe on YouTube.
And we love hearing your comments, so please don't be shy in the comments section below.
That's it for now. See you next time on MediaSnack.